It is time to wake up, America. There's a financial tidal wave at our front door, and it will play havoc with those owning a tax-deferred retirement plan, like a 401k, a 403b, a 457b, an IRA, a SEP, or a simple. And it all begins with the number 7,000. That is the number of baby boomers that will turn 65 today and qualify for Social Security and Medicare. That is the number that will turn 65 tomorrow, and the next day, and the next day. By the end of this year, 2.5 million baby boomers will have turned 65. Most Americans assume there are already millions of baby boomers in our entitlement program. However, that is not true. The first baby boomer turned 65 in January of 2011. They will continue to turn 65 at a rate of 2.5 million to 3.75 million per year until 2030. By that time, we will have 79 million baby boomers who have qualified for Social Security and Medicare. If you believe David Walker, the former Comptroller General of the United States, our government's #1 accountant, the man who knows what the books look like, we will need $45.9 trillion just to cover Social Security and Medicare payments promised to baby boomers. That is not how much we need to collect in taxes by 2030. That is how much we need invested today. How much of the $45.9 trillion have we set aside so far? Zip. Let me give you an example of how much 1 trillion is. What year do you think it was 1 trillion seconds ago? Not hours or days, but seconds. The answer is 30,000 BC. To put that in perspective, there are 86,400 seconds in a day, 31,536,000 seconds in a year. Yet it takes 32,000 years times 31.5 million seconds to equal 1 trillion seconds. And we need $45 trillion. Then there is our $14 trillion in national debt, the $1.5 trillion additional debt expected this year, the $200 million in yearly interest payments on our $14 trillion in debt. If you add up all of our current and future obligations, Mr. Walker believes we will need $61 trillion to cover our current and future obligations. I believe it's extremely important that you verify this information from additional sources. I've included a link at the bottom of this page to a series of videos entitled IOUSA Solutions. This is a must-see series of videos for every American, especially our teenagers. After all, if we do not find a solution for this problem, they will be the ones paying for it. Even if our politicians find a way to balance our yearly budget and pay off the $14 trillion in national debt, it still does not solve the $45.9 trillion we still need for baby boomers. Some in Washington are beginning to discuss changing our entitlement programs. The most extreme plan calls for privatizing Social Security for those 55 and younger. The cost of Medicare is far greater than the cost of Social Security. However, even if we were able to bring Medicare into a balanced budget and privatize Social Security for those 55 and younger, we would still have almost 40 million baby boomers retiring in the current system, needing over $20 trillion we don't have to provide them with benefits. Where do you think taxes are going from here? Where do you think our entitlement programs are going from here? As bleak as this sounds, unfortunately, it's only half our problem. Many of our states are also facing a fiscal crisis. California's nearly junk bond status, Illinois increasing state income taxes by 64%, Pennsylvania bailing out Harrisburg, and then there's the extreme issues facing the state of New Jersey. According to Governor Christie, the current unfunded liability for state employee pension plan is $22 billion, and the state has not funded the pension plan for 13 of the last 17 years. In addition, unfunded liabilities for health care coverage for state employees is $66 billion. To get the full story, go to the additional links page of thebetterwaytoretire.com and watch the 60 Minutes video entitled State Budgets, A Day of Reckoning. With over $100 billion in state debt, $14 trillion in national debt, and $45.9 trillion owed to baby boomers, let's look at how this all affects your tax-deferred retirement plan. You do not pay taxes on the money contributed by you and or your employer into your tax-deferred plan. It's not that you never pay the taxes, it's that you postpone paying the taxes until you start withdrawing the funds. The growth in your fund is also tax-deferred. However, as you start withdrawing funds, both contributions and gains are taxed at state and federal levels, and they are taxed at future tax rates. Therefore, if you are withdrawing funds 10 years from now, you pay whatever the tax rate is 10 years from now. The success of a tax-deferred retirement plan depends upon you being in a lower tax bracket at the time of retirement. Many in the financial planning community look to the Aon Corporation when determining what percentage of your pre-retirement income you will need to maintain the same standard of living. Their recommendation is that you will need between 77 and 79% of your pre-retirement income. However, a recent article in the Wall Street Journal entitled "Boomers Find 401k Plans Come Up Short" cites a study done by the Center for Retirement Research at Boston College, and their findings indicate you will need 85%. You will find a link to the Wall Street Journal article in the blog section of thebetterwaytoretire.com. So it looks like you'll need somewhere between 75 and 85% of your pre-retirement income to maintain the same standard of living. It's not that you'll need substantially less income, it is that Social Security will make up 36 to 94% of that income, according to the Aon Corporation. Your Social Security income is what makes your tax-deferred retirement plan work. By the way, you can find a link to the Aon report in the additional links section of thebetterwaytoretire.com. Few Americans still working are aware that there is a tax on your Social Security benefits. This information is on the government's website, Social Security Online. In a nutshell, if your modified adjusted gross income plus one-half of your Social Security benefits is between $25,000 and $34,000 for single filers and $32,000 to $44,000 for joint filers, the government keeps 50% of your Social Security benefits as a tax. If your modified adjusted gross income is above $34,000 for single filers and $44,000 for married filing jointly, the government keeps 80% of your Social Security benefits as a tax. Modified adjusted gross income includes, among other things, your tax-deferred retirement plan. Withdraw too much from your tax-deferred retirement plan and you lose 50 to 80% of your Social Security income, which you need to make your tax-deferred retirement plan work. Knowing we need $45.9 trillion that we don't have, do you think there's a possibility the income brackets triggering Social Security taxes might be lowered? Fortunately, you do have other options. There are still ways to take some or all of your retirement funds out of the income tax system before any changes take effect. One way is with a Roth IRA. It's not the best solution for everyone. For those making above $136,000 a year, I would recommend watching the video, "The Roth Alternative Anyone Can Use for an Income Tax-Free Retirement," found in the index section of thebetterwaytoretire.com. For now, though, let's use the Roth as our example. The money contributed to your Roth has already been taxed at current tax rates. The growth on your Roth IRA is tax-deferred, and when you start withdrawing funds, you pay 0% state and federal income tax on both contributions and gains. Also, the funds withdrawn from your Roth IRA are not considered as income when determining if you will pay taxes on your Social Security benefits. So knowing that we need $45.9 trillion for baby boomers, $14 trillion to pay off our national debt, and billions more to cover state shortfalls, would you prefer to pay taxes at current rates on this? Or would you prefer to pay taxes at future rates on this, knowing it also affects your Social Security income? When it comes to retirement planning, we face a lot of uncertainty. However, there is one thing that is certain. Today, 7,000 baby boomers turn 65. Tomorrow, 7,000 more will turn 65. The tidal wave is coming, and it can't be stopped. Is it time to call 856-887-1887 and schedule your free consultation?